Hi everyone, my name is Mary Redmond, and the pair I wanted to talk about now is the EUR CAD. So ideally you should always try to go for one currency that's in a particularly strong uptrend and one currency that's in a strong downtrend. Well, the euro is not really in a downtrend now, but I think the markets are still overestimating the extent to which the ECB is going to raise rates over the coming year. And we can see that on a monthly chart, the EUR CAD is actually in a downward trend because we've got the 50-day moving average below the 200-day moving average and the 10-day moving average below that. Now, if you were to look at the euro US dollar, for example, you don't see that that's true. In fact, you see that they're moving in the opposite direction. But with the EUR CAD, the commodity currencies are still on a very real tear, and a lot of people are trying to pick the top of the commodity currencies, and they continue to go up, and you get these panic buying, short squeezes. So if you look at the Canadian dollar, it's really against the US dollar, or the Australian dollar against the US dollar, and these are extremely strong upward trends, and they're obviously not going to continue indefinitely, but it's very difficult to pick the top of a situation like this. And in contrast, the reason I like the chart of the EUR CAD, just looking at it from a daily perspective, is you do see here a big red bullish engulfing downward candlestick. So if you were to see that on the Australian dollar chart or on another one of these charts of these commodity currencies, then you probably have a pretty good short, as long as it doesn't go back up above that level. And it's also on a weekly chart. You do also see that it spiked up to its Bollinger Bands, then it made this teardrop hanging candlestick. And you see that on the monthly chart. We've also got this clear downward trending line that's a very clear barrier. And of course, there's always a chance that the EUR CAD could cross this if, Trichet were particularly hawkish this week, said something like this, or if the Canadian dollar and the commodity currencies were to make a big move down. But right now it looks like this line right here is a very important resistance level. So it did spike up there this week, and we can also look at this chart on a daily pattern. You're seeing that there's a move downward in the stochastic indicator. And I also like this from a 4-hour perspective because this is one of my favorite indicators, the 8-day over the 23-day moving average, and that did make a bearish cross this week. So there are obviously a couple of important events this week for this particular pair. There's the ECB meeting, and that's going to occur on Thursday, and of course it's always risky to hold a euro pair over any one of these central bank meetings. And you've also got the Canadian employment report as well as the US non-farm payrolls on Friday. But for the beginning of the week, we're looking before these reports are announced even, I do think that you've got what could be a high probability of a good short trade. And it did make a pretty substantial move down, almost 200 pips starting last week. So it might make a short rebound from that, and around the 40-25 area, I think it could probably be a pretty substantial short. And the fact of the matter is that the Bank of Canada is obviously not doing any quantitative easing like the Fed, so it's probably going to be at least another month, at least another few weeks before these commodity currencies hit a peak and hit a top, and then start to change their trend. I do think the trend in commodities and commodity currencies is going to change in the second half of 2011 for a number of reasons. But as far as right now is concerned, you really don't want to fight the trend. And this is one of those charts that I've seen that really looks as if it does have a clear indication of going down. So the EUR CAD is probably preferable to euro US dollar from the short side at this point.